Bueno, señoras, señores, vamos con el segundo tramo de este FX for a Living en su cuarta edición.
So we are starting with the second session of the Forex Days by FX for a Living. We are starting with Kiana Danial.
Está en España, por
It's the
primera
first
vez está
time
en
she's
Madrid.
in Spain.
Esta iraní de
And
nacimiento, pero
she
de
was born in
nacionalidad
Iran,
estadounidense,
but she
se ha
is a US
caracterizado por
citizen,
intentar demostrar que se
she has
puede
tried to
conciliar
show
vida
that you
familiar
can
con la de
balance
trader
your family
profesional.
life
Desde muy joven
with being a
ha recibido
professional
numerosos
trader.
reconocimientos.
She has received
Estudió con una
many
beca en
different
Japón, estudió ingeniería
awards. She
eléctrica y
studied electric
física
engineering
cuántica.
and quantum
Al ser la
physics in
única
Japan.
mujer en su clase,
She was the only
pues la hizo
woman in
reflexionar
her
sobre este tema e
classroom,
intentó
and that
ayudar
made her
a las
think
minorías,
about it and
especialmente a las
try to
mujeres en
help
los sectores dominados
minorities,
por los hombres.
especially women in
Colabora habitual en
men-dominated
televisión,
sectors.
también
She
en
works
radio,
in the
en
TV,
medios como The
radio,
Wall Street Journal,
in the Wall
Time
Street Journal,
Magazine,
Time
CNN,
Magazine,
Forbes.
CNN,
Se va a
Forbes.
estrenar aquí en España
This is
en
the
este
first time she
Forex
speaks
Day
here in
con la
Spain, the
ponencia
Forex Day,
Técnicas Especiales de Money Management,
with money
sponsorizada
management
por
techniques
FX
and
for a Living. Así que
sponsored by
Kiana,
FX for Living. So, Kiana,
adelante, tuyo.
you've got the floor.
Thank you.
Adelante. Gracias, encantada.
Thank you.
Hola! ¿Cómo está? Thank you. That's all my Spanish. That's the only 2 words I know. Very happy to have you guys here. I know you just had lunch, so you must be sleepy. Don't fall asleep, because then I'm gonna fall asleep, because I just had lunch. And yeah, so we have to kind of interact with each other. Today, I'm going to talk about money management. All right, so I'm gonna tell you why I'm gonna talk about money management. Oh, before we get there, if you're taking pictures of yourself with me, tweet it or Facebook it or Instagram, YouTube it at Kiana Danial or at Invest Diva, and I will follow you back, all right? Let's tweet right now. So today we're going to talk about how to grow your wealth like a rock star. But then you might say a rock star doesn't really know how to trade. They do have the money, they don't know how to trade. Or then the rock star's wealth management. We're gonna get there. And that's the reason why I'm not gonna talk about trading today, is because I wanna tap on one issue that we all know very well in the Forex world. Most traders, unfortunately, lose money. So I'm going to talk about why most traders lose money and how can you become one of those few traders who actually make money. And what do I actually mean by making money? Is it always, always, always making money? Is it continuous wins, or is it a balance? And if there is a balance, what is the percentage that you should be making to be considered a successful trader? So this is my husband, Matt. He is also an engineer. He's a rocket scientist, actually. He didn't know anything about trading, all right? We got married a year ago, a year and a half, I guess. And he got interested in trading and investing. And he got too interested. And so he has now become my annoying client, I'm sorry, who keeps texting me, did you see this? Did you see the market going up? Did you see that? Let's sell, let's buy. And I keep telling him, calm down, like this is not how you should be investing. And the reason why I use the word invest as opposed to trade, even if you're trading Forex, I want you to think about it as an investment. Because if you're thinking of it as a trading, like short-term trading, and I'm gonna get in, I'm gonna get out, get in, get out, get out, what is the market saying, what is the TV saying, what is this analyst saying, what is that analyst saying, you get so confused, and the market noise eventually turns you into a gambler, not even a trader. So you have to start with the mentality of an investor. Think of a real estate investor. They don't flip houses every 2 seconds. They do the research. Where is the best buy to buy? Where is the best place to buy the house? Why should I buy? What is my long-term goal? Who am I gonna sell it to? What am I gonna do to this real estate? And then they're gonna flip it, they're gonna sell it, and they're gonna get a huge profit. go into Forex trading or any sort of investment with that investor's mentality. So here is a typical image of when traders get into trading when you first start. This is what you think is going to happen. You think you're going to enter here, the market is going to go up, you're going to exit, you're going to become a millionaire. That's not what oftentimes happens. And if you're a trader, guess what happens? You enter here, the market goes up, you get very excited. Oh my God, you see that? Yeah, I'm like Nostradamus, I'm the best. Then the markets drop, you get emotional, you get out too quick, right? Then it starts going up again. You're like, oh yes, did you see that? I knew it, yes, I'm the best, I'm gonna become a millionaire. Then it drops again. And if you, by this time, if you're not in your investment mentality, and you say, you know what, fuck it, I'm gonna sell. It drops, but guess what? Eventually, if you've done your analysis correctly, and if you are patient enough, if you have the mentality of an investor, you are eventually going to make your target, which you have analyzed, obviously. I'm not going to get into the analysis of it today. If you have done your analysis, you think this is the right trade, you have done your technical analysis, you have done your research behind the currency, behind what the markets are saying, which direction the country is going, if you're trading stocks, what is the future of that company. I'm not saying don't do the analysis, but once you do, be patient. Don't flip. Be patient and you will be rewarded. And that is why I don't day trade. I'm not saying day trading is wrong. The only reason is that that is not my full-time job. I have a full-time job running a company. So I don't have the time to do my analysis on each of my trades completely so that I can get into this entry level with confidence, so I can after that just sit back, relax, and watch the markets just move their way. I tend to call the currency pairs dancing because it's always two pairs. It's a pair, two participants, right? So they're always dancing. They have to go back, forth, and eventually, this is my target market, eventually they're gonna get here, right? But you wanna sit back and watch them dance. Enjoy the dance. Don't get out too quickly for that reason, all right? So, a little bit about me and why I'm talking here, and maybe you'll say, oh, she doesn't know what she's talking about, she's wearing pink, she's probably just, I don't know, a kitty cat lover. No. So, I started trading in Japan. I went to Japan to study electrical engineering. I was the only girl in my class. It wasn't fun. Japanese engineering students didn't want to talk to me. They were scared of me. Anyways, so I studied, but I got very bored with engineering, so I started trading. All right, 2008. It was my last year of my master's degree, and what happened is the markets were crashing. 2008, everybody remembers a crash. Dollar yen was falling, dollar value was going down. I didn't know anything about finance. I was a geek. Engineer, nothing. I didn't even know what a financial crisis meant. I didn't know who Lehman Brothers was. But what I did know was that, well, the US dollar value is lowering comparing to Japanese yen. And I had this Japanese mom who was a trader, who was an FX trader, and she taught me how to take advantage of this. Within a month, August 2008 until September, dollar yen went from 110 to 95, I think, yes. So I had $10,000, I put it in the account, 14 times leverage, made $10,000. This 1 million yen is $10,000. All right, I got lucky. What is wrong with what I did? I wasn't educated. I didn't know. I had $10,000 as a college student. I had $10,000. Yes, I was in TV, I was making money, I was on scholarship, all that. But I took a very huge risk. I got lucky. It was enough to get me interested in the market, but that was wrong, what I did. right? And today I want to talk about why you shouldn't be doing what I did, even though I got lucky. Don't get me wrong, Forex is great. Yes, I'm a big fan, but do it right. I went to New York to learn more about Forex, and that's when I learned. I worked at FXCM, and I was in the analysis team and at the PR team, and I was seeing all these clients of theirs are losing money, and I was like, why don't you educate these people to actually make money so they become a return customer? Because a lot of these guys, they would hear about Forex, yes, let's get rich quick, they would lose the money and they will never come back. All that marketing effort would go to garbage. So I told them, why don't you actually educate them? How about I help you, first of all, to target women, because a lot of women are scared or they don't want to get into it. They think they're intimidated. And why don't you actually educate them the right way to make money, and you'll make less off their losses initially, but eventually you'll have returning customers. So guess what happened? I got fired. And that's when I started my own business at investdiva.com, partially to get back at my boss to show them that I can, but also partially because I really felt the education and the investing mentality is really essential when it comes in this field. So that's why if you go to my website right now, investdiva.com, I don't have any partnerships with any brokers. I don't advertise. I do not deal with brokers. I really just provide the education. That's the reason why, if you were wondering. All right? So let's get back to the risk factors when it comes to Forex trading. I'm just going to go over this quick, right? So you don't treat, there are 11 loser factors when it comes to Forex trading. 1, you don't treat it as an investment. You become a gambler. 2, you think it's a get-rich-quick scam or scheme. No, it's not. It's an eventual, gradual money-making, wealth management machine. You don't understand the risks of Forex. Maybe some of you already do. Some of you don't. You get emotional about your trades, and I'm going to get into why you get emotional. It's very normal. We are human. We get emotional, but how can we not get emotional? I'm going to get into that in a minute. We only listen to the news. Guess what the news really care about? Ranking. So they have to create drama of the most stupidest things just to get your attention and to get more people viewing them and following them. I don't follow the news as much. I just get the facts, and I have in the back of my mind. Some people only follow their heart. Oh, I know dollar yen is going to go up. I know euro dollar is going to go up. Sometimes gut feeling is all right, but it's not only that matters. I do want you to follow your heart. Why? Because you want to feel good about your trades too. I mean, eventually, why do you want to make money anyways? Because you want to feel good. So yeah, you do want to follow your heart a little bit, but not all of it, right? You only do technical analysis. Technical analysis, I'm a big fan, but only relying on technical analysis also doesn't allow you to really look at the markets in a holistic view, right? Or you combine only 2 or 3 of them, you get very excited about your wins. That's my husband. He's like, oh yeah, I'm the best. And then you think that you can just continue doing that. You stop doing your analysis, and of course, you lose your money after that. And, well, finally, it's just because you are not educated. So we're going to get you educated. And that's what we do at investdiva.com. It's what I call the InvestDiva Diamond Analysis, because it has 5 points, and I like diamonds. So I had to make sure I got a lot of them. So you want to look at the markets from different points of view: technical, fundamental, sentiment. That's your market sentiment and your own feelings about the market. And overall, how is the fundamentals and the technicals and the market sentiment all pointing in the same direction? If yes, you can go. But before you go, did you check your financial situation? Very important. Why? I'm not going to get into the technicals and fundamentals today because these guys, Ashraf and this guy and that guy, and well, she didn't really, they already covered technical analysis and fundamentals, so I'm not going to get into that. I'm going to get into capital analysis. This is my course on investiva.com. If you want to check it out, go to investiva.com. Subscribe for free to get the preview of it. So we have all these stuff. Today I'm going to talk about capital beans. And by the way, the reason why I call it coffee break is because there are 100 videos. Each of them is 5 minutes. So if you're working, during your coffee break, you can watch 1 video per day. So that's the design of our education course. So money is emotional. We spend money because we're emotional about it, and we make money because we're emotional about it. So I want to raise a hand. Why do you trade? Why do you trade? Yes, you. To make money? Really? Oh, that's awesome. How much money though? How much money? Do you know exactly how much money you want to make? $25%. All right, so that's at least a quantified answer. But do you know why 25%? Because some analyst told you? Okay, all right. So I think I'm understanding you correct. So you're on the right track. I'm very proud of you. Because a lot of people get in there, I want to make money. Of course, I want to make money too. But when it comes to investing to make more money, it's exactly when you want to select your education, when you want to go to university. I want to become a doctor. I want to become a lawyer. I want to become a plumber. So you see what you're good at and how much money you want to eventually make. So you select that major to study in. Same is with trading. You have to understand why you're trading, what is your goal, how much money you want to make, because what do you want to buy or what do you want to achieve with that money? So that will keep you on track. That will help you eliminate the emotional trading. All right, so we're going to take you step by step here, and we're going to do some calculations right now. So take your notes out. I'm actually going to ask you questions, all right? Take your notes out, and I'm going to ask you to first calculate your net worth. You've got to know your net worth before you start trading. And net worth is your current assets, anything that you have that is cash, that is property, that is your car, that is your jewelry, anything that you convert to cash or is already cash, minus your liabilities, your debt, your mortgage, your education debt, anything that you may have in Spain, your wedding, we don't know, all right? So that is going to be your net worth, all right? And then you have to calculate your net worth ratio that we're gonna get into it. Know how you're doing financially. Keep on target to meet your goals. They're the 5 steps to financial planning. Have an advocate to help you if you can't do it yourself, because there is no golden answer for everybody. You can't say, oh, they told me you have to invest 20% of your savings in Forex. Your situation might be different because not everybody is you. You have different goals. You might want to buy a helicopter. You might want to go and retire in Bora Bora. People have different goals. So for that reason, you have to really be personal with your financial planning. There is no one single golden rule that applies to everybody, all right? And then you're gonna sleep better knowing that you are on track with your finances, and better yet, you're gonna sleep better if you're trading, knowing that, okay, even if this trade goes wrong, I still have a backup plan. So you wanna have that backup plan so you eliminate that emotion more and more from your trading. All right, so this is what you want to imagine. And I am a strong believer in law of attraction. I'm not sure if you're familiar with it. That means whatever that you think and whatever that you imagine and whatever thoughts that you put into the universe, you're going to get back. That is what you're going to get, but you have to be very focused. So imagine, where do you want to go? What do you want to do in 5 years' time? In 5 years' time, imagine yourself. Where are you living? Who are you living with? Where are you laying at? Are you at the beach? Are you working? Are you with kids? Imagine it. Write it down right now. Don't forget about it. And then we're going to go to the next slide. All right? But this is going to help you build your financial and budget goals. And again, I have a question for you. When do you need a plan for your financial life? When do you need a financial plan? Right now, exactly. Ahora, I learned that word today. Ahora, yes. That's when you need the financial plan. The sooner, the better. This is about credit cards a little bit, so I'm not going to get into it because America is a little bit different than Europe. The only thing that I'm going to say about Europe is that for your loan applications, these are the points that you have to keep in mind. You have to make sure about your current salary, your family situation, current debt, residential status, so that you're in tune with your loan application process before you even get into investing, all right? So, approaches to financial planning. This is the main topic. There are 4 different ways to approach your financial planning, personalized, customized for yourself. The first one is life cycle approach. There's a 2-step metric approach. It's very fancy. It's a cash flow approach. And finally, you put them all together, and it's your strategic approach to your future financial health. Life cycle approach obviously depends on your age, on your marital status. How many of you have children here? All right, very good. How many of you are paid by their parents? We have one. Awesome. Oh, okay. A lot of self-paid. All right, that's good. Know your job situation. How many self-employed do we have? We have quite a few. All right, okay. So you got to put into consideration all this before you make your financial statement. All right? And then you're going to fall into 3 different categories. These are the phases of your financial life. Okay? First one is after 22-ish, after you graduate college, you start making money. This is your asset accumulation phase. This is the time that you actually have the tolerance to take some risk because you're likely you don't have children, you're not married, you just got off your parents' allowance, and you're young, you want to take risk, right? But then you get into your 30s, 40s, and 50s, and you're eventually going to start having kids, getting married, thinking about your retirement, right? So that is when you get into conservation and risk management phase. This is when it's most important to know how much you're going to invest, how much you're going to trade in Forex, how much you're going to invest in stocks, real estate, all that. And then you get into retirement phase. Do we have any retirees here? All right, that's awesome. So retired, it's a little bit easier, especially if you've done your financial planning in advance. You have the net worth that you're able to take some risk, but still, you want to be very careful because now 90 is not even, you're going to live until 114. Are you going to have enough money to live under 114, 120, right? We want to make sure of that to make sure that we are in the best situation growing old, right? So this is what you have to look at when you start trading, where you want to go, okay? So with that, the 2-step approach that I talked about before, it focuses on your risks, savings, investing, and it looks at your personal risks, right? So what is going on in your family, your medical situation, your medical history, all right? This is when you get very personal. So do you have a specific disease in your family that runs in your family that you might or might not, there is a likelihood that you get it. You want to put that down as your risk management. So you want to get insurance for that, for example. Do you have, how many kids do you have? So do you want to save for their college? In Spain, you don't really have to save for your college. That's my understanding. It's free. In America, it's a huge deal. So you're very lucky on that sense. So that gives you a little bit of a more flexibility to invest and trade Forex. And I assume that's the reason why it is more popular in Spain or Europe in general. But again, my understanding is that mortgages are a little bit more, are higher in Spain. So you have to put that into calculation, all right? So with that, here's the 3-step metric approach. The first one looks at your risks, right? So you want to have your insurance, you want to pay for your insurance, everything down to the point. So you want to keep money away for that. And then this is the important one. Panel 2 is your short-term savings and investment and debt management phase, right? So this is the important stuff. You want to calculate your emergency fund. We're going to calculate it in a minute. You want to calculate your housing ratio. You want to calculate your debt ratio for your short-term goals. And then we get to the good stuff. We get to the long-term planning. And that is your retirement goals, when you want to retire, how do you want to retire? You want to retire in Canary Islands, or you want to retire in Hawaii, you want to retire right here in Madrid. It's beautiful, I love it, right? Education funding goals, you don't really need that in Europe. Large purchases goals, you want to buy a boat, helicopter, jet? You want to buy a shoes? Pair of shoes, all that, lump sum. So you want to have these goals written down so you know where you're moving towards. And legacy goals, that is for a little bit later in life, what you want to do with your money afterwards, all right? So with that, the metric approach actually gives you some metrics on where you should be standing. So this is where I want you to actually take your calculators, your phone out. Everybody has a phone? This is the time you can have your phones out, not for texting, but for calculating this very simple equation. All right, take out your phones right now, everybody. All right? So you're going to add all the cash that you have available right now in your bank account. Anything that is convertible to money, your liquid assets, right? You want to sum them up. You have, I don't know, $10,000 in one bank savings account. You have $20,000 here. You have so much so here, so much so there. Things that you can change into cash immediately. Sum them up. All right? You're good? You have the answer? Now you're going to divide it. Actually, write that number down. Write it down or memorize it. Okay? Next, you're going to calculate how much you spend per month on necessary stuff. Things that you have to pay, otherwise you'll die. Your rent, your food, right? If you're a woman, your shoes. You have to buy shoes, otherwise you'll die, right? All this stuff, necessary stuff. How much grocery shopping, right? How much do you spend on these per month? Write that number down. Now you have two numbers. Divide them. The first one divided by the second one. Your answer has to be between 3 to 6. If it's lower, you cannot trade Forex. No, I'm meaning it. You cannot. Because guess what this number tells you? This number tells you the number of months you can survive if something happens. If your parents stop giving you money, if you lose your job, if you're self-employed and you go bankrupt. This is the number of months that you can survive. This is your emergency fund. You want to make sure you have at least 3 to 6 months of emergency fund in cash that you do not never ever touch. No matter what happens in the market. No matter if somebody tells you, you know what, if you make this trade, if you put that money out of your account and put it in this broker and you make this trade, you're going to become a millionaire, do not do it. You cannot afford to take this risk. Okay? And guess what this do to you? Because you have this safety net, if you take a risk with your disposable money, you're not going to get as emotional anymore. And that is going to take off this burden off your shoulder, right? Next, we want to calculate your housing costs. I understand that in Europe, this number can be a little bit higher because your mortgages are higher and you don't have to pay for education. So your housing costs divided by your gross pay, that is the money that you make, right? If your housing costs, you're calculating it on an annual basis, your gross pay also has to be on an annual basis. If you're doing it on a monthly basis, it also has to be on a monthly basis. This has to be smaller or equal to, for you guys, I'm gonna be a little bit more generous, 40. Because you don't have the education in your mind. So you have to make sure that ratio, you're in tune with that. And this one, if there are any Americans here, has to be smaller than 28%, all right? The rest of you, Europe, 40. The next ratio that is very important is your housing costs plus any other debt that you have, a car loan, credit card debts, wedding down payment debts, any other debts, all right? You wanna add them up, divide it by your gross pay. That number, because this is 36, I would say for you guys, needs to be smaller than 50%, all right? So when you have these down, you're halfway through your financial planning. Are we still good with time? Where do I have to look at? 5 minutes, oh, all right. We're gonna go to the next slide. Cash flow approach, I'm not gonna get into it, but once you've done your financial planning and you know where you stand with your goals and with your current financial situation, that is when you can get into readjusting your stuff. If you need more cash flow to be able to get in tune and on track with your housing ratio, you might want to pay less for insurance. You have to see what makes sense for you. These are all before you even start to invest. Okay? These are all before that. These are the steps that you need to take before that. And just a quick note on debt. We do have good debt, reasonable debt, and bad debt. An example of a good debt is a very low interest rate, low interest debt that has an amazing outcome, right? So if you're taking this debt, in America, we would say if you want to go to college and you want to become a doctor, yeah, that's a good debt. Because first of all, the interest rate is low and you're going to become a doctor, you're likely going to be able to pay it back, all right? Bad debt, credit card debt. Fortunately, a lot of Europeans don't have that problem. Americans are crazy. When I first went there, I was like, what the hell is wrong with you? Who has credit card debt? Do not ever have credit card debt. It's the worst form of debt ever in the human history. High interest, no use at all, and it keeps you completely out of track with your financial plan. So finally, when you have your cash flow and your debt management, your risk management, all these in tune, that is when you can start thinking about investing, trading. And that is when you're going to find out how much, what percent of your disposable money, you're going to be able to invest in Forex. Did you realize I just used the word invest in Forex, not trade? It doesn't really matter, but mentality, like it is going to matter if you use that word for yourself, because it will help you become less of a gambler. So make money, asset accumulation, have your money make money. This is investment, and repeat that. Back and forth, and you're going to retire happily ever after, right? So once again, I'm going to show you this one because this is very important. And lastly, we're not going to get into strategic approach because we don't have the time for it, but I do have a book that, this is for beginners though. This is the Forex for beginners, but I do go over capital analysis, which is basically what I talked about right here. There is a cheat sheet inside this book that you can write down all the stuff that I talked about plus more, just to figure out if you can trade Forex, all right? So the cheat sheet is in this book. I have a few more of my books available at the booth. Come to me later, otherwise you can buy it on Amazon. And this is our website, investiva.com. I have definitely right now on your phone, subscribe for free. Go to investiva.com, subscribe. The reason why I'm saying this is because I'm having new courses coming up, and we're going to have a pre-sale of that. So I want you to get that notification for the new courses. So sign up for free so you get the notification. The new courses are going to be on wealth management and Forex trading for experts. We didn't get to talk about Forex trading as much today, but on the website you can go to media section, and I send out one weekly Forex trading analysis, one monthly stocks and ETF analysis, and one monthly video. So if you subscribe, you'll get all that. And follow me on all the social media, because on Instagram I share my holiday pictures that you don't want to miss. And that's it. We're done. I'm on time. That's awesome. Thank you.
Thank you.